All right, good morning, everybody. Let me kill this. Everything's going on a little bit wonky this morning. How is everybody doing on this fantastic Thursday morning? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Let me just make sure I have, yes, I have sound. Everything is good. Perfect. All right, so Bitcoin's bouncing around here, playing around the lows. We were looking for a higher bounce up to 35, so 34, 35K, and then see price roll over. We have a gap that's up there on the CME chart. That's basically the real only technical basis that I have for looking for that to happen. We know that basically there is a lot of accumulation happening right now. A lot more accumulate. Well, it's more accumulation than what was happening around the 2022 fresh new yearly highs. If you remember, there was an event back then, and everybody was hyped about Luna, and a lot of Bitcoin was being bought basically for the Luna project. Well, we know that the unwinding of crypto assets in the risk markets together caused a little bit of downward pressure on Bitcoin, thus also causing downward pressure on Luna and its peg. Once that peg got destroyed, then Luna's price just continued to unravel. What I want to show you here briefly is we can see that on the chart. So we know that Luna owned over 80,000 Bitcoins to basically help sustain the peg. They started to really sell that around in here was when they first started selling that first lot, if you will, of Bitcoin. It was roughly around 22,189. So not roughly, but that's a pretty exact number starting up there. So tranche number one, when they started to unload 22,189 Bitcoins, we actually got an absolutely phenomenal supply or Heath level test, if you will, right there. So this is when roughly 22,000 Bitcoin came back into exchanges. There was 3 exchanges altogether. They started to unload the Bitcoin to basically try and prop up their market or their stable coin, and then Bitcoin just started to drop. And then as they unloaded more, 30,000 on tranche number 2, it just got a massive downside push. And then once they unloaded the last of the lot, which was 28,000, that was roughly right around in here. So basically from up here in 3 sections on this chart, you can see where the aggression kicks in. So you have your consolidation here, you have your supply or your Heath level test, then you have your expansion to the downside. This expansion is not nearly as volatile as the rest because this was occurring over a period of like 22 hours or every 18 hours. But anyways, consolidation occurs. This is, they sell into it, then it pushes price lower. This really shows you how the supply and demand works inside of these financial markets. Here was your second tranche. This is when they unloaded 30,000 more Bitcoin. You didn't really get a fantastic Heath level test on any of this price action, but right here was a fantastic place to look. Now, obviously, with a big downside candle like that, you're not expecting price to come back. And if it does, you're actually going to be really nervous about that position. And that's just trading, right? Even though you're only risking a small amount of money, you always want to win every single trade. This is where emotions comes in. But the supply was overwhelming, and then boom, you got that last final stab lower, a little bit of capitulation, and they went from owning 80,000 Bitcoins to 300. From 80,000 to 300. That is a lot of selling that took place on those final days. So that's basically why we've seen that massive downside push. Fantastic stuff. Glassnode, the YouTube channel, put together some fantastic stuff. If you want to go check it out, go check it out. It's just on their Glassnode channel. Just type in Glassnode, and it was the last the last video they just uploaded. He basically goes into depth on this stuff. It's fantastic. The reason I even wanted to bring it up is simple, because supply and demand runs the markets. If you have more selling than buying, then obviously price is going to go lower. And it's as simple as that. So right now, if we go over here to my stuff, This is when the first event, or when the event happened, we were looking to sell into that based on technical analysis alone, right? We knew we were going to see more downside with the Fed, the macro environment, the war in Europe, everything like that. So we wanted to be sellers. The fresh yearly high, that was a phenomenal trade. And then after that occurred, there wasn't a whole lot of accumulation happening. Well, now we're seeing accumulation happening. This is a good sign, but it can also be the driver for the final capitulation event. I don't know if it's going to play out as perfectly as that. It would be nice, but we'll see how it plays out. But what I mean here is, even though you have all this accumulation happening, it doesn't necessarily mean that you're going to see an upward thrust in price. It just means that we do know that on exchange, people are accumulating Bitcoin. They are buying it. They like these prices. The reason is because the closer and closer that we get to this realized price, or this realized, let me stretch it out here. The closer we get to this undervalued region, right, which is fair value, it's simply going to see more and more accumulation happening. This is where the floor is, or it has held the floor in the past. Once again, it does not mean that it is going to happen this time, but this is where we want to be buyers. And on this channel, I've been saying this over and over and over again. Make sure you don't just start buying it when you touch the green. We want to see this thing trade inside of the green for many weeks, at least a couple months would even be nice, right? Because that's when you really start to see that accumulation starting to fire up. So now that we are seeing a little bit more accumulation, it is fantastic to see that accumulation happening at the lows instead of at the highs. So if we look at all this accumulation that was happening, basically all of this right in here is where these people that bought were selling, right? And then we got the next stab lower, and then that Luna event essentially just drove price down, 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 right? Massive levels. We weren't even looking for them to get hit on that stab. I was looking for the gap fill first, but we got what we got, and it was a fantastic trade. So now we're looking for, what we were looking for is to see price go up and fill that gap. This accumulation kind of worries me a little bit, because we still have risk in the markets. We've still seen the S&P 500 come off a little bit yesterday. We've seen Bitcoin put in a bull trap to the upside, and now we're seeing downside continuation from that. So this accumulation that is happening early could also be, the reason why we see a capitulation event. Because if price starts to fall, a lot further than where we currently are, it's going to force these early adopters, or these early accumulators, if you will, to exit their positions as well. And that could give us that move lower that we want to see, or that at least where we want to start looking to be buyer. Now, I expected this to take place over several months, not as soon as we're getting it here, but it is what it is, right? We trade the chart in front of us instead of, trying to predict or give you a macro look. I can do that, but where I really truly shine is on today's range. That's my style of trading. Here is your options: open interest, put to call ratio. This thing is still screaming to the moon. All right. So basically what this is people are still expecting more downside. So they are continuing to put puts on even while we're chopping around at these lows. This is your swing low right here. So you can see where that correlates with these puts here. All right. So more choppiness down through here, but this thing just keeps going up. So people are buying a ton of puts right now. This tells me that, I don't know, if the majority of these put buyers are retail or if they are not. It does not matter. What matters is that people are still looking for more downside. And if it's possible that this is retail and they are buying the bottom, that means we probably will get that bounce. But if it isn't retail, if it's, investment firms, banks and stuff like that trying to hedge their long-term holdings, then this could be indicative that we will see more downside. Futures long liquidations are small over the past couple days. Obviously, the massive stab lower got 3 big, huge down days. And on those 3 big, huge down days, we've seen a lot of liquidations occur on the long side of the chart. And then what else was there? Oh, yeah, futures open interest. We can see that it is getting a little bit bigger, but this isn't really what I would want to see like transpiring if I was looking for another leg lower. To me, this almost kind of looks like we are seeing, people are trying to buy the dip, and we were looking for that bounce. That's what we were looking for, but it doesn't mean we will ever get it. So basically, when I tell people, people that listen to me, that follow me on Twitter, they want to know what I'm thinking about, what I'm looking at, and then I try to give you, to my best ability, what I think is going to happen. You got to understand that is just my opinion. It is always only my opinion, because I simply just do not know. If I knew what price was going to be doing, obviously I would be living on my own island somewhere as a trillionaire, but I don't. So this is where we were looking for resistance to hold, and it broke above with a nice close above. This is your bull trap. All right. Now, we didn't get a bearish engulfing on the next day, but it might as well have been, because you didn't take out the previous day's high, but you did well compensate for that on the push lower, and you closed lower than this opened. So that means anybody that bought on this candle are now stuck, right? Because you got below the open and the low of this day. So this day here wasn't a perfect opportunistic time to look for short entries. One of the guys inside of my membership told me that, this thing's already bounced. He was looking for shorts, right? And I was like, well, I'm looking for 34K. And he was like, well, we've already bounced 23%. I mean, that's a pretty good sized bounce. It doesn't look like it on the chart, but it is in fact a big bounce. 23%. That's a massive bounce. And it looks like as of now, the market is accepting that as the bounce, because we see more downside continuation yesterday, and we got a fresh close below daily support. Now, this daily support is also, this daily support is also your Q1 2022 opening range. So if I pull this over here, that is your Q1 2021 opening range. So basically all of 2021's price action has been evaporated. Every bit of growth that we've seen in 2021 has been sold off. It has been completely revamped or recouped, if you will, and we are trading below it now. We did get a stab well below that. So people want to know, how much lower can we go? As far as supports and resistance levels, we don't have any up here, because if you remember in the past, Bitcoin's swing high, the highest it ever traded, was $20,000 or 19,000 and such. 19,000 and some change right there. 19,891.99. That's the highest it ever traded. So once you get above that level, there really isn't any technical levels to go by other than your candlesticks. So here is your first one, and then here's your next one, right? This is where we currently are. We're opening on the 2021 opening range. We are on that right now. We are testing to see if that wants to hold support. Your next monthly candle, if you will, puts you all the way back down to the old all-time high. There really is no support inside of this candle. Now, if you go to the drop down into lower time frames, you will see supports start to show themselves. Now, in my strategy, we look to bearish closes to be support. I know this is going to confuse some of you guys, but something that I also try to show you is old resistance can also be support. So yes, on your higher time frame charts, your monthly, your quarterlies, your 2-week, the open and close of every single candle has the ability to act as support or resistance. So the next level under this wick low to look for support would be $23,476, because it's the only thing you have inside of a quarterly or a monthly. And then if you even drop down lower, then you're going to see that the weekly and the 2-week time frame correlates, because obviously every 2 1-week candles opens a new 2-week candle. So, but it's nice when you get a correlation like this. So here is your old all-time high. That is also when you get your first bearish weekly candle. All right, so right under the old all-time high, you have one area of potential support standing in its way, and that price is $23,476. It's this level. So if we do lose this area here, which is just the daily and the quarterly, Then you got this potential area, which we've already tested. I mean, if you take out this swing low, this is it. That is it. I don't even think you got anything. Okay, so that there, boom, right there, perfect. So this weekly level or the 2-week level also correlates with a bearish 3-day and so on and so forth. So it's a big leg of price right here. A lot of price action. That's $10,000 right there. Boom, boom. So, I mean, technically, this is how far you could see price go. I don't look for that to occur because in Bitcoin's past, it has never retested an old all-time high, ever. But past performance does not, past performance is not indicative of future results. Okay? Man, I'm froggier than ever. So this is the thing. Bitcoin is worth so much money. Once you start to get above, a certain region, then obviously the more expensive an asset gets, then, the harder it is to push it higher because you've got so much money in it already, so much market cap. The one thing that people were not really paying attention to in this bullish market cycle, why they were looking for higher prices, is they were looking at this push, this bullish rally, as not enough, right? Because usually Bitcoin does 1,000% to the upside from bear market low. If you just go back from the 2020 swing low and go up to your all-time high, that's 1,375%, 1,000% of upside. All right, that's why we were looking for downside. We were looking for this to be the ceiling. From that swing low, man, you got 1,300% gain on Bitcoin. That's pretty astonishing if you think about it. I mean, you can go back in time and look if you want, call it diminishing returns. I do not care what name you put on it, but for people to look for, that's not even it. For people to look for more massive bullish gains in a bearish environment, and when you've already had an asset run over 1,300%, and that number gets worse if you go to the actual bear market low. That number gets a lot worse. You're looking at 1,855% to the upside. So from $3,000 to 69 grand is a massive, massive bullish rally. Let's see what we do over here. So that's 10,000%. So people are looking for 10,000%. But naturally, the more expensive an asset gets, the harder it is to get or realize these kinds of gains. So just think about it like gold. People are looking for Bitcoin to put on gold's market cap this bull market. That's insane. Where is the money coming from? You have to have $7 trillion flow into Bitcoin to make it go up there. $7 trillion. Right? We got this kind of a move with just billions. Imagine trillions. Now, at one point, the market cap was setting at $1 trillion, but you need to 7x that in order to get to gold's market cap. And it's just not going to happen. It's not going to happen this year, right? Not in my opinion. So we do protect ourselves to the downside. And, that's what you got to do as a trader, as an investor, whatever you want to call yourself. You have to minimize your downside risk. You have to protect it. It is the money that you have sitting in the market, and it does suck to watch that get sucked away and drained away, but you can put these things together for yourself. You don't need to listen to other YouTubers and things like that. Protect yourselves by paying attention to what the Fed is doing. The Fed has been driving every bullish rally since '08. So when the Fed starts to back off on their interest rate hikes, once they start to get inflation under control, I don't expect them to roll out quantitative easing, because quantitative easing is a tool used in very dangerous times. We're not in a very dangerous time. It's just they're trying to get in control of inflation. I listened to 2 Fed meetings yesterday, and he said the same thing in both meetings. So basically, he's touching on the same points in every meeting he does, and that is they're going to keep doing what they're doing. We have jobs. See, if you remember during the pandemic, there weren't jobs. That was the problem. Jobs were being lost. There were no jobs. That's why they brought in, and the market was falling, crashing. falling hard, fast. That's why they rolled out quantitative easing. Right now, we have more jobs than we have employees or workers, if you will. So there is a ton of jobs. We have a very good supply of jobs out there. We just don't have nobody going to get them. That is driving wage costs up, which is typically good for the American, for each person that has to work. Hell yeah, who wouldn't want to get paid more money? The problem is that won't sustain growth, right? So these prices has to come down. The only way it comes down is if the jobs get filled. We're in a very different monetary policy or a different economy than we've been in before. The pandemic and the supply chain issues, all that stuff, basically we're starting to see what really transpired then now. And that is putting a lot of sell side on all markets. So basically, typically when you have high inflation, then that typically means that the value of assets should rise, right? Someone asked me this question earlier. Well, the problem is the value of the actual currency that's being used to fund those stocks is in dollars. So that in itself will cause asset inflation, that will cause people to just basically look to exit their more risky portfolios and look to put that into something a little bit safer. Like I talked about last week or last Tuesday during the live stream, we have the dollar that is absolutely going straight to the moon. This is where those money or those funds are going. A lot of people are putting their money in this. Also, obviously, bonds and stuff are going to do really good simply because because interest rates are rising. So if interest rates are rising, then they can put their money back into these bonds and they can generate alpha or a yield, 2.82%. To be honest, who wouldn't want 2% on their money? It's not a very good alpha. It's not great, right? If you invest in this asset, you're only going to make about 2%. So, but that's where it's going. This is considered safe money. It's considered safe money. It's not growth. It's not to grow a portfolio. It's to protect it. So they start throwing their money in dollars. They start throwing their money in bonds. They also used to throw their money in the JPY and Swiss franc, but they're not doing that. They're not doing that this year. This year is completely different. We were looking for the Japanese yen and the Swiss franc to be absolutely strong during this time because it typically does go up. But I guess they're blaming their BOJ's monetary policy on this breakdown. We are starting to see that little bounce, and stagflation is here when this is happening. Aussie was even strong for a little while there. If you remember, as everything was coming off, Aussie yen was my favorite sell side position, looking for, to capitalize on that down move. But at the beginning, Aussie was getting massively inflated. So people are finding alpha. They're just finding it in different places. This is why the stock market's coming off. This is why crypto's coming off, because all of that beautiful bullish monetary policy just had everybody investing in everything, every risk asset, every growth potential out there. Let's put some money in it and see what happens. That is now starting. Those portfolios are getting closed down. This is why we're seeing downside in everything. Now all you can do is weigh out the technicals. If you are an investor on Bitcoin, you can start buying at any time, because I do truly believe that in the future, you will never see $20,000 Bitcoin. But my future is 10 to 20 years from now. And that doesn't mean it'll happen. That's just what I see, the potential for it as a risk vehicle, or even as a growth sector type of stock. If you want to look at Bitcoin like that, people put money in it because they believe they're going to make money, right? That's why. So I do believe that eventually Bitcoin will be worth, a lot of money simply because of the halving. It has a fixed supply, and the halving cuts into that. That will fuel Bitcoin to higher and higher valuations. That will bring money back in. So once inflation gets under control, once that is done, then investors should come back around and be like, you know what? The Fed's not going to prop up the markets, but I think it's safe to go ahead and start buying back into these risk assets. And then it'll take approximately 1 or 2 weeks to be trading at all-time highs again. I mean, you see it. Capital rotation happens when it happens on a mass scale. It doesn't take long for all your assets that's been sold off to be right back up. All right, so Euro USD, one of my favorite things to look at today. I hate selling into anything that's off so much. But we're seeing a little bit of downside on such like SPX and Bitcoin and everything yesterday. And this is going up. So we did liquidate these 2 swing highs. So now we have a resistance level to watch right there. I don't want to see an hourly close above that. If we do get an hourly close above it, I still will keep my eyes on it, because like around 9 or 10 o'clock, you might get that bearish reaction. Because here of late, it seems like the plays are taking longer and longer to unfold. I don't know what that's about, but 7 to 10 is typically when I look to take Forex entries, and I'm going to be watching euro dollar today for a sell side trade. We already liquidated these 2 swing highs, so I don't want to see it pushing up here. All right, if we start to push up there, then in my opinion, it isn't going to be a short. But unfortunately, it's trading at the level I want it to be trading at 9 o'clock right now. So this is the level I'm watching, 1.05003. It's a big fig, 105. It's a big figure. So we're watching this level right here to see if it holds. If it does hold on an hourly closing basis, or if we get 1 hourly close above, I will watch the next hour to see if you get a rejection. If that next hour continues higher, then it is not a short. It is bullish continuation. Here is your London session open. The London session typically puts in the high or low of day. Not always, but often. It's like 60-something% of the time the London Open sets the low or high of day. So we do have a low that was set at London Open, and we do have a high that came in at 4 a.m. All right, so 4 o'clock in the morning, well, 4:59. I don't know exactly what time it was, but before 5 o'clock, you set in the high of day. So this is your low of day. This is your high of day. Makes things real nice and easy. Got resistance there. Got an intraday demand there. So if it's a long, this is where you're looking to be a buyer. If it's a short, this is where you're looking to be a seller. All right? All right. And that's pretty much it. I mean, that's all I've seen is that one asset. Everything else is up pretty big. Let's see here what Aussie Yen looks like. You've already came off really big. I just don't like it. Let me see. Where are you? You're still up on the day, but this is your daily move. This happened last night during the Asian session. London session, sold it right back down. So you're right back around the open. Here is your open. So just right above the open of the day. Daily low is there. Daily high up there. There's just nothing here for me. Nothing. No technical setup that I like. Aussie dollar. If the dollar starts to get bullish, which I think it will, then this will be more attractive for the downside. Already seen that happen. On the London Open, though, you did still get a big bullish candle and you are going up. But on this asset, this is your high of day. What is that? Is that a monthly level? It is. Old monthly support right there. So, all right, back into it. So that's old monthly support. And we did tick up there. So basically, but what this will do is gives you plenty of room to watch. You'll definitely want to look to be a shorter if it stays up here and closes back below. I don't think you're going to get back up there. If it does roll over, it's probably going to happen pretty soon. Let me see. This is just daily high to this low. That's not your low of day. So boom, boom, 618 to that swing low. So I don't know. I don't really trust intraday fibs as much. I will look at them from swing low to swing high on the entire daily range. But I don't like looking at them from swing high to a swing low if it's not the swing low. Swiss franc is very, very strong today. Japanese yen is too, but the Swiss franc is stronger, which is why you're seeing this impulse. So this thing has been sold off viciously, just like the yen did, but you are getting a bullish pop today. New high of day is there. So watch this area as support. If this area holds a support, You may have a bullish entry here targeting high of day. If you get an hourly close below 134.11, then you're leaving it alone. I mean, you just have to go across the board. Pound CAD is another one. It's setting right around the open of the day. Right around the open of the day is fantastic areas to watch. Here is the open right there. It's a good place to watch because it shows us something. Your intraday range is lower, but this was your high of day. You have taken out the high of day. So is this going to be the low or is this going to be the high? Well, we have a level to watch. One spot, 59100. Hourly close above, then the high looks like it wants to get taken out. If it can't take this out, then you're looking for more downside. Big stab higher here. This thing is wonky. To me, it looks like order flow is bearish. So I would be looking more towards the sell. I don't like the fact that you had a lot of bullish momentum coming out of the London session, but you did just liquidate the high of day. And you are seeing a bearish reaction from that. So we'll keep an eye on this level here. Pound yen is going to be hard because you're at the lows. I don't like anything at the lows. Pound is strong today versus the dollar. But once again, if the dollar strengthens up, this is going to roll over. Let's go look at the dollar real quick and then I'll answer some questions because there's not a whole lot to do. My favorite asset on the day is the dollar or Euro USD. Bitcoin trade has already occurred. If you want to buy it, you want to buy it down here. This is daily support. This is also 3-month support. So, if you want to be a buyer, this is where to be a buyer. I don't know that it's going to go higher and test resistance again. I have not a clue. This is your high of day currently setting at $29,491. This is going to be your low of day. So you're setting right smack dab in the middle of your daily range. And you had downside yesterday. So bearish engulfing, retest or a pullback into resistance and then rolled over. So that expansion occurred yesterday. Today could be sideways to up or it could find resistance and roll back over and continue lower. So this is the only levels to watch. Daily going to be that, and then you can put a level on your hourly resistance, which is now this candle here. Actually, that was probably a trap. So you could watch this one. Hourly close above 29,226 is going to negate a bearish trade. So if you get up into this, then you're not looking to be a bear anymore. If this bearishness is going to continue, you don't want to see it get up above that. But remember, you are catching this on a tail end of a 3-day down move. So there was your breakout. First bearish day, pullback yesterday. So this could be a pullback as well. Or you could get more downside expansion to here. This is what basically has gotten front ran right there. So it's a beautiful place to be a seller if it gets back up there. But we'll watch it, see what happens. Hopefully it gives us a setup. If I'm bearish on the euro, then I'm going to be bearish on Bitcoin. That's just the way I do things. Typically, they don't always play out like that, right? But here's the thing. We know that for the last 3 days, minus one pullback day, Bitcoin's been bearish. We know that on the SPX, the last 2 days, been bearish, excruciatingly bearish. Here's your dollar, bearish. Something's got to give. So, in a situation like this, we stick with the trend. Boom. There is support. Here we are on the intraday. Got intraday support there. We have a beautiful demand level right there. And we're testing it. So this means that the euro is pushing up to make a new fresh high of day. Here is the support. 103.440. That's where I'm looking to be a buyer on the dollar. If I get an hourly close below that, then I won't be. Unless the very next candle is a bullish engulfing. Right? So typically when you lose a level on a close, it makes you say, wait a minute, I got to back up here. Now the chances of me actually taking this position have drastically decreased. Now I have to see an exact bearish reaction on the next hourly candle, or I'm not messing with it. And I don't mean a big 5-minute candle. When you're trading hourlies, you got to wait on the hourlies to close. I've literally watched these candles be nasty bearish, and then the last 2 minutes of that candle spike up. The last 2 minutes, get back above support where I'm looking to take my trade. So this is the level where I want it. If we get back above it, then that's where I'm looking. But I will take that on the Euro USD. See, we're pushing right back up to that high of day. And typically I want to look for trades after 7 o'clock. Any time before then, it's just run amok. Price action is wonky and crazy. It's either already made its move or it's setting up to make one. An hourly close up above all this stuff, then it's going to scrap the trade. Good morning, good days, good mornings. Hello, everyone. Glad to spend some time here. Thank you for being here, every one of you. 30J bond price. Are you talking about the 30-year Japanese yen? I don't know that ticker. Vermilion, if you can give me the ticker, I will absolutely look at it for you. Put to call ratio, does this show that even though we had a low and a small bounce, those puts did not close yet? No, this means that puts are being accumulated or they're being bought. They're being purchased. This indicator is the put to call ratio. So this is showing you the spike that the puts are having against calls instead of calls. So like when this thing is going down, then that means typically people are looking for more upside. When this thing is going up, then that means people are looking for downside. And it could be speculators. It could be speculators. I mean, I buy puts when I'm taking a day trade, so that could be it. But, bigger investors, banks and stuff, puts are very fantastic vehicles to use to protect your positions. They can be used. You spend half the money, it's a small percentage of the amount of money that you have in the asset. You take a small percentage of that and buy puts that could protect the entirety of the portfolio. I mean, you could do it. I seen people, last year in 2020 make almost more money on just a few puts at the top of the market, and they didn't lose anything. They actually made money. Their portfolio had a gain, whereas everybody else's portfolio had a massive drawdown back in 2020. People nailing the top of puts. Sometimes people just buy puts at the all-time high just simply because if you get a drawdown, that one or two puts could substantially protect your account. Because as price starts to go down, the volatility ticks up. You get the expansion value increased into the option. I mean, there's just the option explodes in value. You buy, a put for 75 or $100, and then, within 2 big bear days, that put is probably worth $900 to $1,000. That substantially protects your portfolio. So that's why they're buying them. I don't like to see them get bought at the lows, simply because professionals they're not taking shorts at lows, right? Like we are, because we're looking at this as a day trade. We're not looking at this as an investment. I'm a day trader, so I'm looking to capitalize on today's range expansion, whether that be to the downside or to the upside. Once we get that move, I take off 2/3 of the position. I almost completely close out the whole position, but I will leave a small piece on for any continuation that occurs. It very rarely happens. Most of the time, those trades get stopped out because I'm taking, I'm looking for areas on the daily time frame to take these entries. So here, typically, you would be wanting to look to go long at a support. The problem is Bitcoin is in a downtrend. That is everything. That's why I'm looking to go long on the dollar at support, because the dollar is in an uptrend and it has had a pullback. So in an uptrend, I look to buy off support. So the dollar looks more attractive to me for a bullish entry at support than Bitcoin does, because Bitcoin's in a downtrend. So what I want to do on Bitcoin is I want to sell the resistance. That's what I've been doing on Bitcoin since November 2021. Since the Fed came out and said that we're going to change our monetary policy, pretty much been looking to sell it. And that has been the trade. So all year, 2022 and 3 months into last year, we've been on the right side of the market while everybody else was on the wrong. Everybody else was on the wrong side, but not us. So, but that's because I look to stay with the trend. You sell swing highs in a downtrend. Sell swing high. Obviously, consolidation is going to throw you. It doesn't matter what it's doing, but this thing is bullish. It's extremely bullish, and it's been ripping faces off. BTC Fuel account looking for this thing to roll over and be killed because of Bitcoin did it once back in 2010 or whatever. Come on, dude. Anyways, yeah, we're not looking for this to roll over. But if it does, then you definitely want to see risk assets going up with it to be correlated with that. A few days of downside or even a month of accumulation is okay because of the expansion we have already seen. That does not mean the dollar is over. This has been an astonishingly good year. Here is your yearly open. Right there. That's your yearly open on the dollar. And so almost for all of 2022, it's been pretty much one-sided. This was your last consolidation. It wasn't very long. We were talking about this breaking out to the upside. Remember? We were talking about it and it occurred. Now we're at another area where we could see a little bit of consolidation. It's fine. We don't want to lose this area here, though, because if we do, then that means there's a pretty good potential that we're coming all the way back down to $100, $100.93. But we can watch these support regions to look for bullish entries. This one, if we get stopped out here, then we'll look to take this one. If we get stopped out then we just wait and see what happens. Because after that, you're probably going to get back under the 50 and you'll be under the 21 exponential. And that typically shows you where your trend is and the direction of it. So I don't take trades based off of the moving average, or I don't take entries on the moving average. It would have worked out here, but it wasn't the moving average. It was this level of support is why that got bought. Boom, boom. But it was a confluence. It was a confluence. But this is a rapid moving average. It's quick. It'll let you know when the trend could be changing. There was your first down day under it, but it immediately got right back out of there. So this is what we like to call in the business a bear trap. There was support. There was your breakdown of support, breakdown of the moving average. The very next day was your bullish move up. That's why we were bullish. We confirmed a trap on this day. Then we got bullish. Boom. So we'll watch for something similar. It could happen here, but the trend is bullish, so I want to look for bullish entries. The trend is bearish on Bitcoin, so I want to look for bearish entries. Bull trap into a bear trap. It's unlikely. I mean, it can happen. I see what you're saying. Since we put in a trap here, can this be a trap also? And should I be looking to be a buyer? My answer to you is no. I mean, it's possible, but when you start looking at trap over trap over trap, then the probabilities with each time has gone out the window by 90%. You know what I mean? The trend is down. So watch resistance to sell. That's the easiest way to analyze Bitcoin. That's the easiest way, right? The trend is down. So anytime you get an inflection at resistance under the moving average, you're looking to sell it for that trend to continue. I know Bitcoin maximalists and Bitcoin bulls hate to hear me say that, but I'm not a maximalist. I'm a trader. I'm trying to teach you guys how to manage your own money. And the best way to do that is to be with the trend, not against it. Against the trend is dangerous and risky. It does play out every now and then, and it looks very attractive when you nail a swing low, right? I bought the very, very low of this thing. Kudos to you. But where are you going to take profits? Are you looking for this to be the ultimate low? Are you looking for the trend to change? Why not just wait for the trend change? Then you trade with the trend. We got really extended on Bitcoin. We got overbought on the daily. We got really extended, right? That swing low right there, extended. So naturally, you want to see a pullback. Well, we got that. It lasted for several days. Now we're seeing a downside expansion again. There is accumulation happening. We know that for a fact. And this is a quarterly level. We know that for a fact. So if you want to buy a small piece here, I don't see no problem with it, but just understand that that's likely to not have continuation. You're typically wanting to take a position where you stand the best likelihood of continuation. And trading with the trend gives you that likelihood. Choppy sideways conditions are difficult. And then when you're in that, you have to trade the ranges. So we just broke out of a range to the upside and then immediately went back and tested the bottom side of the range. Is it possible that it puts in another trap? That would be that this bullish candle, today's range would have to be an engulfing in order for that to be the case. So yeah, if you close today above yesterday's high, then look to buy support. But as of right now, you're looking to sell resistance. And that's only for the up move, the small, I guess you would call it a wave count. I don't count waves. I'm not an Elliott wave guy, but I can see the market. I can see what it's trying to do. It is chaotic, though. Nothing works every time perfectly. I don't, let me see. You still haven't, US 30 year. Got you. Or not 30 years, just US 30. Why? Oh, the 30 year. US. Got you. Yeah, I mean, if the 10 years up, the 20 years up, the 30 years going to be up, right? The 30 years up 3%. I mean, it's a bullish. This is where their money is. So the money's coming out of the SPX. The money's coming out of the Dow Jones, the NASDAQ. All of your growth stocks have taken a massive dump. That's because people are taking their money out of those things and putting their money in safer assets. It's not for growth. That's what you need to understand. They're not doing it for growth. They're doing it for protection. We're not in a growth environment. I will let you know when we are in a growth environment. Then we will look to buy highly speculative vehicles to make hundreds and hundreds of percents. It's not now. Okay? Not now. Not right now. Right now we are in a save your money climate, not burn through it, not fighting against the trend. That's the worst thing to do. Can you please have a look at silver? Yeah, silver's got crushed. There wasn't much alpha to be generated on silver or gold. That's why we were bearish on the two assets. But silver got slaughtered. Silver got spanked. I don't know what happened here. Like, I don't know if there's some kind of news or something, but I can tell you one thing. They fleed this asset. I mean, gold got that bullish rip and silver got that bullish rip because of the war. And then that all got sold off quickly. So, same scenario. This one is oversold though, or hit oversold regions. So you can wait for it to either show a potential trend change. What you need is a higher high, then a higher low, then a new higher high. That suggests that you have a near-term trend change. It does not mean that the macro trend has changed. It just means the near-term trend has changed. Something like that, right? That says that there is a near-term trend change. Then you look to buy every impulse lower, impulse lower, impulse lower. So that's basically watching this thing go up, up, and up. But I don't see that happening. So since you're in the downtrend, swing high, lower lows, lower highs, look to sell resistance. So up here, or now you are currently testing a resistance. A resistance. You did break down, or you broke out, closed above resistance, and you got a higher push. So kudos to anybody that got long based solely on buying support. On this day, this one day, you see how that worked? You closed above, then you opened up. You came in for a retest of old resistance, now support. Then you got a bullish impulse to the upside. That's when you're taking profits because the very next day you got stopped out. Same scenario. Right back up into resistance now. So I would be looking to sell it. Looking to sell it today. That'd be me, right? I'd be watching resistance for the sell. And I like it right where it is. You got an hourly supply zone right there. Correlates with a daily resistance. This was the entry. If you get another test of it, that's your entry. Stop above whatever swing high you wish. But don't make it any bigger than this swing low down here. Typically, you're only looking, for me, I'm only looking for the low of day. So I'm looking to get short here, and this is my target. Right? Boom, boom. So, but you might get continuation out of this. You might get more downside. So, watch this level, 21.56. If you get a close above 21.56 and a close above your last hourly resistance, which is there, 21.59, you're scratching the trade. Or if it was me, you're getting stopped out, because I would have probably taken that entry, right? So I tell you what, if the downside's going to continue on silver, I don't want to see an hourly close above that, 21.54. So an hourly close above this right here would get me out of the trade. All right, so that you don't even have to wait for your stop to get triggered. You just jump right out of it, because it just don't look good anymore. So that's what my trade would look like if I was looking to trade silver. This is my target. Since it's such a good risk to reward, 3.85 to 1, I would actually take profits here at support. That's where I would take profits. 3 to 1 risk to reward. I'm not greedy, and that gets me out at support instead of waiting and trying to push the trade further than it can go. Once that occurs, I take off 2/3 of the position. I move my stop to break even. Now that 1/3 position size is free money. I cannot lose money. Plus I banked money. Put money in the bank. Check. In the position. Still risk less. Check. You are still risking unrealized P&L, but you can't lose money. Your money. Right? Your money. That's what you're trying to preserve in this game. Your money. Not unrealized P&L. Don't even worry about unrealized P&L anymore. Just get that out your mind. What I want you to protect is your money, because your money has to be protected in order to see growth. But that's the high probable setup. Short looking for that as that, and then boom, you made 3% on the day. You can wipe your hands off. You're done for the day. Boom, quick and easy 3%. Come back tomorrow, try it again. Euro's up 40%, so Euro's looking like it's probably not going to be a short today. Sorry. Can you please have a look at, that's what we're looking at. What is up? BTC 1 hour. Heath, BTC 1 hour. Do we have a bear flag channel that could potentially drop us? I mean, it looks like it. I'm not a pattern trader, but you know what I mean? It's one of those things. John, welcome. Hello, should I say boom shakalaka? Good morning, my friend. Jan, formerly known as John. J rhymes with. DAX. Is DAX just DAX because it's not an asset I trade? I know a lot of people do, but it's not me, right? But I'll look at it if that's it. The DAX index. Let's see here. What we got? We're in a downtrend. Looks like we put in a high. Looks like we came off a big bunch. I hear my boy outside meowing. He's hungry. Let's see here. 23%. So you're in bear market territory down here. Up here, not so much. But the trade is a sell, right? You sell resistance. Sell de resistance. There is your resistance. And then watch for those bullish closes to sell into. Huge gap down yesterday, or I don't know if this is today, if it's trading right now. It does look like it is. So massive gap down. So what I would be looking for is a retest of this. Not today or tomorrow, but eventually maybe come up, retest that. If it doesn't happen, maybe here's as low as you go, right? Maybe you come up and you test this over here. That's where I'd be looking to be a seller. Boom. Looking for another expansion lower. You get above this trend line, then you'll probably be looking for near-term bullish entries. Near term. That means a week or two of profits, and that's it. KNC USDT. Don't have much data on this. Oh, there it is. Lots and lots of data. It's getting absolutely demolished, rectified. I mean, it's bad. Oh my goodness, man, that was rough, wasn't it? 80% drop in the span of 2 weeks, 3 weeks. 1, 2, 3. 80% off. Boom. Man. Yeah, that hurt for anybody that bought the top. That absolutely sucked. They watched their investment go all the way down to 80% off. It looks like a short, obviously. This spike was a dead cat bounce. Not now. Do not take the short now, because you're going to get stopped out probably. But I would be watching this level right there. And I would wait on a test of that. Give the moving average time to catch up, which it has been with this impulse up, which is beautiful. The closer it gets to price, the more I like the trade. And then we'd be looking to short it lower. You get above it, and then it holds a support, and you get a higher low. Then you can start to look to be bullish again. But right now, you're looking to sell resistance in 220. I like it. I like it there, or roughly around there. You need more data, a couple more daily closes. Get back up here, form a range, if you will. Then look to sell that resistance. NAS 100, and then I'm going to wrap it up. I want the CFD. Oh, yeah. I mean, look at that. Beautiful. Resistance. That was another trappity trap. Boom. Faked you out. Straight back down. You're at support, though, guys. I mean, don't look for near-term shorts right now. You're at support. Put yourself in the mind of these people here, right? Look, price goes down. There's your impulse. Then you get to push up. This wasn't the trade. This was. Here was your push up. There was your next test of resistance. Boom. Got in there. Boom. There. Boom. Then this happened. This is when everybody got screwed up. Everybody thought it was going to be bullish. And I said, well, we need a higher low support first. Then we need to take out this high. Then you can look for new all-time highs. But that didn't happen. And in fact, once you got back under the moving average, it was an easy trade. Sell resistance. Here was your next opportunity. That was a fantastic trade. Sell resistance. Boom. Sell resistance. Next move lower. Boom. Sell resistance. It's hard to do, though, when you have a big, strong day like that. It's scary, right? Scary. If you're scared, you're taking too big of a position, more than likely. Nobody should be afraid to lose 1% one time a day. You don't want to do it every single day, but because if you do, then that's a 5% drawdown on your portfolio. You don't want that. So like my goal every single week is to close the week out neutral or green. I absolutely despise going into a Saturday on my FX portfolio red. I despise it. I would rather not trade all week than lose money. I don't like losing money. It sucks. So I'm losing money this week. I'm down. I got slaughtered this week. Not slaughtered, but I mean, I lost the trade. So now I'm down. Now I'm looking to get that trade back, but I'm not going to force the issue. See this daily range expansion? You're still midpoint yesterday's bearish day. So yes, you're up on the day, but it's not beautifully up. I still like it short there. And all I need to do in order to get back my week is to hit a 2-to-1 risk to reward on this asset today. If I short this and I get my 2-to-1, then I go back into the week green because I've lost one trade this week. It's as simple as that. Mathematics. Been watching several things, but just not getting it. Not getting the entries. Just terrible week. Good morning. All right, guys. You guys have a fantastic day. Do you have an EW count for Bitcoin? No, I'm sorry, Mo1 Amri. I do not trade Elliott Wave. I said I do not. I mean, assets move in waves is what I'm saying. See, waves. but I don't count them. I just don't, because like I've never really studied Elliott wave, so I'm not going to talk down on it, right? I've never studied it, never looked at it, never had to. People want to make price analysis a lot more difficult than it has to be. It's simple. I'm looking to sell resistance. I don't care how many waves down it's had or how many waves up if I'm looking to buy support. It's just I'm looking to sell resistance or buy support. That's it. Day in and day out. So I don't do Elliott wave. I couldn't even tell you the first step in Elliott wave analysis, other than you're looking for some waves and you're looking to count them. That's all I know about it. All right, you guys have a fantastic day. If you don't mind, smash the like button and all that jazz. It does help, blah, 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 blah. You guys have a fantastic day. If I missed your question, or if you have a question, just drop it down in the comment section, as I do read over them all and I do answer every single question. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.